Hey everyone, welcome to Machines and Money. Today we're going to talk about 3 indicators that show that Bitcoin is at least close to bottoming, if not already bottomed. And of course, these are not meant to point out an absolute bottom in the market, as that's pretty much impossible, definitely unrealistic. But they're meant to show a guide of where we are in the current market cycle versus previous market cycles. So the first indicator, which I'm going to show up on the screen here, is the capitulation indicator, which tracks Bitcoin's price distance from the 13-day EMA and the 200-day SMA. So the price fall from the 13-day EMA shows short-term capitulation, max fear in the market. And the distance from the 200-day SMA shows overall market apathy. It shows that we've been in a bear market for a while because Bitcoin's already below the 200-day SMA in all of these, and it shows that on top of that, with the 13-day EMA, that there's also a lot of new short-term fear that drives out a lot of selling pressure in a very short amount of time. And specifically, this indicator flashes when Bitcoin's price is 20% below the 13-day EMA and 40% below the 200-day SMA. So this has happened only a few times in Bitcoin's history. The first one was in January 2015. As you can see, it didn't really follow or call the absolute bottom because it had this flash crash later that year in August, but it really marked the point where Bitcoin was a really good buy if you're looking out months or over a year into the future. And we're going to look at the performance of these all compared to each other in just a moment, but just want to fly through these real quick on the chart. Next is November 2018. When Bitcoin broke below that 6,000 mark that everybody thought was the bottom. It really derailed very fast, sent a lot of panic into the market. Sellers were everywhere, and the price crashed ultimately below 3,200, almost a 50% drop. So again, this one didn't call the bottom, but it was very close. And Bitcoin, of course, had this major rally in the first half of 2019 after that. And the next was the COVID crash, March 12th, 2020, which did actually mark the bottom, but it was a pretty rare case, as it was the ultimate black swan event, max panic and max fear, and it actually sent Bitcoin into a V recovery that would be continued into the next year. And then in 2022, this signal triggered multiple times during the Terra Luna collapse, and this was the farthest from pointing out the bottom because the actual bottom happened over here with FTX. But if the FTX collapse hadn't have happened, this might have been a bottoming out range because price was pretty steady here between 18K and low to mid 20K range here. But ultimately, a few months later, the bottom would be reached. However, we'll see that a year and a half later, the price was significantly higher than even those triggers during June of 2022. And then most recently, this wasn't an official trigger because the price was actually 39% below the 200-day SMA instead of 40%, but it still was over 20% below the 13-day EMA, so I'm going to count it just for the purposes of this video. And that was during February, during that very sharp collapse in late January into early February that didn't once again mark the bottom because we had the Saylor capitulation over here where he sold 32 Bitcoin, and more recently, I don't want to get too off topic, but Bitcoin actually rallied after the announcement that he sold, I think, a couple thousand Bitcoin. So we'll see how that goes, but ultimately this indicator, I believe, marked a significant level that's close to the Bitcoin bottom. It was around 60K there. We ultimately fell below 58. The bottom might be in, it might not, who knows, but I think we're closer than we are farther away from it. And if we look at this chart here, this measures the performance of Bitcoin after each one of these moments where the indicator was triggered. So if we look one by one, we'll start with 2015. This was a pretty accurate and reliable forecaster for the coming rally and this chart measures 18 months. So within 18 months, Bitcoin had rallied 361% from that point where the indicator triggered. And around a year later, it was over 150% higher. For 2018, it had this initial drawdown of 17.6%, but within a year, actually around 7 months, it was up 233% from this initial 0 point, and then a year and a half later, it was still up over 120%. 2020, this was the strongest indicator by far, as Bitcoin's price rallied 1,273% in about a year and a couple months from this trigger. I think about 13 months actually. So 13 months and a 13x for Bitcoin's price, not too bad. 2022, this was in July or June of 2022, so we did have this drawdown during the FTX collapse. The worst drawdown was 16.9%, 156 days after the trigger, which was about 5 months. But then after that, about 7.5 months in, Bitcoin was up 25% after being down over 10%. And then it ended up rallying 132% in almost 18 months from this initial point. So from this bottom, it was actually a decent amount higher than that. It was probably around 200% or so. And then the current cycle is pretty much flat overall, although it did have this 30% rally within 90 days. But we're already 153 days in. So we're about almost a third of the way there in this year and a half long period. And the price is still relatively flat. The worst drawdown was 6.7%, so nothing terrible. It's been worse a couple times, actually. But we're still kind of behind some of these other cycle rebounds. So we'll definitely keep an eye on that. And I think that this will stand true, that Bitcoin actually will rally from here, even if it still is range bound for a little bit going forward. Now for the second indicator, this is a simple MA crossover. This is on a monthly chart, so it has to do with longer time horizon moves. And it measures the point where the 200-day SMA makes a monthly close below the 13-month EMA. So instead of the 13-month or 13-day EMA, this time we're using the 13-month EMA just to capture longer-term trends. And so you can see the first one back here, again, 2015 in that bear market. This doesn't look like a big drop, but it actually, Bitcoin fell from 1242 down to 166. So that's like a 90% or 80-some% drawdown. And Bitcoin, or the indicator triggered here in February of 2015. Again, range-bound activity for the following 8-ish months, but then it was really off to the races in the next bear market. Next was December 2018. If you remember the first indicator, the capitulation when triggered in November, this one was actually in December. This range-bound period was a lot less, or a lot shorter of a period, about 4 months before this initial rally. And then there was a longer range-bound period here before the huge rally of late 2020, early 2021. And then moving forward here, again, July 2022, after the Terra Luna collapse, and we had this major capitulation candle down intra-month 40% plus, but then we also had this final washout during the FTX collapse, which was a drawdown from this indicator trigger, but still Bitcoin made some nice gains in the year plus after that. And then most recently it triggered in April of this year, which was also a month that the third indicator triggered, as we'll see. So that has kind of a double bullishness, even though we had a drop in June due to that Michael Saylor, sale drama, sell-off, whatever you want to call it. We're still not too far below this point. So Bitcoin closed April at 76K, fell to about 57K. So that is about 20-25% max. And we're still, well below this point. But if we see what happened many times in history where, the range-bound period where a bottom is carved out in the price of Bitcoin takes 8 to 12 months, we can see that this could actually be just a pretty low point for that range, and I don't expect it to go much lower than that. We just could see some chop for a few months going forward from here. And if we look at the performance chart for after the MA crossover signals triggered, we can see that there were, again, some negative performance initially, as none of these are actually meant to call an absolute bottom. Pretty sure any effort to do so is futile. But if we look at these one by one, 2015, it was actually down 16.8%, about 6 months in to this period, which again, 18 months. So a third of the way in, Bitcoin was down about 17%. People were probably like really giving up at that point, thinking that the another Bitcoin bull market would never come. And right when people think that, of course, the opposite happens, and we had this parabolic move up initially that kickstarted the sustainable rally that would eventually culminate in the 2017 bull market, which was like actually 100x, $200, below $200 to $20,000 in that bull market. So one of the biggest of all time. 2018 also had this initial drawdown, 8.4%, just over a month into this period. But then we had the huge rally in 2019, and it was up 250% within 6 months. And then it ended the 18-month period around 150% up. 2022, a little bit smaller of a gain because we did have this huge setback here with FTX, but still ended up 84% higher after 18 months. And actually, within that period, it was up 101.5%. So still made a 2x even after this 32% drawdown from FTX. So actually, it looks like the current situation with Bitcoin and the recent performance is tracking really well with this 2022 cycle. So we're 69 days in right now. The worst drawdown was 23.2%, 61 days in. That was that 57K-ish bottom just a few days ago. And we could be on track to face something similar. I don't think we'll see another FTX level collapse. But something to note is that even though something as major as FTX caused this sell-off, it still wasn't that bad of a sell-off. And with this drawdown in 2022, Bitcoin was already down almost 10% before that even happened, and it ended up only falling another 20-ish% from that level, despite one of the largest exchanges in the world collapsing and basically being revealed as a giant criminal enterprise. And last but not least, this is actually my favorite of the three indicators. This one is a MACD trend reversal. And for those unfamiliar with MACD, it is represented in this chart down here. You can see that there are three things to look at here. The blue line, which is the fast MA, it's a shorter term MA. For this, I use the 13-month. The orange line, which is the slow MA, it's a longer term moving average, and I'm using the 21 EMA monthly for that. And then these red and green bars down here, which measure the gap between the two. So when the fast MA is lower than the slow MA, it means that price is in an overall downtrend, that momentum is slowing and the bars are red. When the opposite happens, the bars are green. And when you see the trend reverse, when you see it still in that negative momentum, but things are starting to look a little bit better because the slow MA the gap between the fast and slow MA is narrowing because the fast MA is going down at a slower rate than the slow MA. I know that's a lot, but really the point is here that it's a shift in momentum, and it's even before it's revealed by the switch from red to green candles is when this red goes from a darker red to a light red. So that's what I look at for the MACD, and you can see that again we have another trigger here, this time March 2015, so getting a little bit later and closer to the rebound here. Again, proved to be very close to the bottom of that cycle. We also have February 2019, which is after the previous indicators flashed during November and December 2018. We've got this one that really captured the initial rebound of that rally in early 2019. And another thing I'll note is that the MACD indicator isn't really meant to capture a moment of capitulation like the other two that deal with moving averages. It's really meant to show that the trend is changing. So It's meant to show that price is going back up instead of trying to catch a falling knife. And if we go forward to the most recent one, actually the second most recent, 2022, this was not as great. It was a little bit more messy because the fast MA was actually below the zero bound here of the MACD, but it still ended up being a pretty solid indicator. And this one, again, was later than the other two indicators in October, whereas these happened right after actually slightly after the Terra Luna collapse. This one happened right before the FTX collapse, but that just means that the rebound was sooner after this triggered. And then we've got the most recent one in April, just like the second indicator, the MA crossover. We've got another one here in April. And of course, the first move again was not up. It was slightly up in May, but then we had this big down month in July, minus 20%. So we had this initial drawdown, which happens. It's not out of the ordinary, as we've already seen with the other two indicators. And if we look back at the chart of historical performance, each time this indicator triggers, we can see once again that all of these ended up making it at least a 2x over the following 18 months. So starting with 2015, we had this chop for several months. About 5 months after marked the bottom of minus 13.4% drawdown from this trigger point. But then 443 days later, so less than a year after this max drawdown, it was up 212-ish% from this 0 point, which means it was up probably around 230 to 240% from this point in under a year. And it ended up around 150% higher over that 18-month period. 2019, we had, this was actually one of the best bottom calls of all of these, minus 2.6% just 4 days in. That was the max drawdown, and it was all up from there, especially during the first half of 2019, where it topped out at 242.3% just 4 months into that period. And then at the end of the 18-month period, it was still up 202%, or 200.5%, pretty much the same thing. But a 3x in 18 months is not too bad, especially when you've got the COVID crash in the middle of that as well. 2022, we've got this major drawdown initially, which, if I was talking about this signal back then, it probably would have been discredited by a lot of people, but that was very short-lived actually in the grander scheme of things, and the price rallied starting about 2.5 months into this, while the initial drawdown was 23%. A few weeks into this period, it was back to zero really within 75 days. So if you could get through this couple months of hell, basically, the other side was much, much brighter. And within a year and a half, it was up over 250% from this level, which was probably up around 300% from the FTX bottom here. So on a long-term chart, if you zoom out with these indicators, they can really prove to be an area where you want to at least think about buying. And of course, I'm not telling anybody to buy, but it should at least cross people's mind, because markets are, more than anything, just a reflection of emotions with any given asset. So it's a picture of how people are feeling about any asset at any given time. Right now, the picture is pretty bleak. As you can see, even with two bullish indicators flashing in April, we still had this massive move down in June. And a lot of people have given up. A lot of people are leaving the space, and sentiment is extremely low. A lot of people are calling for Bitcoin to fall to something like, 40K or even lower. I don't think that's going to happen. I think based on these indicators, the worst that we saw was, I think, that 30% drawdown of the MA crossover. Yeah, 32.3. So, you got to zoom out and measure the upside versus the downside. If you've got a 32.3% drawdown, that only takes a 50% move to get back up to break even, which in crypto can happen in a very short period of time. And if you're DCAing through that, then it'll really give you a cushion against that drawdown. So really what I'm saying is, I think Bitcoin is bottoming out. I don't know if the bottom's in. I probably will never say that the bottom is in on any given day because the bottoming process can take weeks or even months, as we've seen in these examples. But I think that when you take into consideration the sentiment of the market, which these indicators are just basically forms of data analysis to measure that sentiment, I think that the upside over the next year really outweighs the downside. So hopefully we'll look back at this video and say that I called it and that Bitcoin's a lot higher for all of our sakes. But I just wanted to show these indicators as kind of unique ways to measure Bitcoin's price. I've never seen anyone use these exact markers before, but through my years of measuring Bitcoin and analyzing charts and things, I noticed these three were relatively decent indicators at measuring a point where Bitcoin's downside is much lower than its upside, which is really all you can ask for longer term investments. But that is it for today. So if you enjoyed the content, definitely subscribe to the Machines and Money newsletter. There will be an issue out later today covering this exact thing. And we also cover individual projects, going to start being more producing more data intensive content as well. So measuring DeFi 20 components and the DeFi 20 index is something that I talk about a lot on both my Twitter and in Machines and Money. So definitely look into that as well. But links for all that's going to be down in the description. And I thank you all for watching so much. And if you enjoyed it, also definitely be sure to subscribe to this because I've got a lot more content planned. Thanks again for watching. Bye.